Hello, welcome to Morris Money, where we give you stock tips in under 5 minutes. I'm your host, Morris Willie. With Levi Strauss going below its IPO price, could it be a good time to buy the stock? Levi Strauss & Co. stock tumbled 12% on October 7th following its third quarter earnings report. For the quarter that ended on August 22nd, the denim apparel maker's revenue rose 1% year over year and grew 7% in constant currency terms to $1.52 billion, but missed analyst expectations by $80 million. Its adjusted net income declined 18% to $161 million, or 40 cents per share, which still cleared the consensus forecast of 3 cents. For the full year, Levi Strauss expects its revenue to rise 6.7% to 7% on a reported basis and 11.5% to 12% in constant currency terms. Do you see Mr. Northington? He subscribed in style, and so can you. Subscribe in style with Morris Money. Analysts had expected its revenue to rise 11% on a reported basis. It expects its full-year adjusted earnings per share, EPS, to land between $1.44 and $1.49, which would represent a 2% decline to a 1% decline in growth from 2021. Analysts had expected its adjusted EPS to increase about 5%. Like many other apparel retailers, Levi Strauss blamed that slowdown on inflation and supply chain disruptions. But has Levi Strauss stock also gotten too cheap to ignore after tumbling 40% this year? Levi's best known for its namesake denim jeans, but it also sells casual and dress pants, tops, shorts, skirts, jackets, accessories, and footwear. It owns 4 main brands: Levi's, Signature by Levi Strauss & Co., Dockers, and Denizen. I apologize if I messed up on that last one. It generated 95% of its revenue from its Levi Strauss brands in fiscal year 2021, ending in September, and the remaining 5% came from its other brands. Levi's products are sold in about 50,000 retail locations across 110 countries, but that total includes all of its retail partners and franchises. On its own, Levi Strauss operated 1,043 company-owned stores and 600 company-owned shop-in-shops in 38 countries at the end of the third quarter. That's up from 905 company-owned stores in 32 countries at the end of fiscal year 2019. That expansion makes it one of the few brick-and-mortar apparel retailers that actually continued to open new stores during the pandemic. In fiscal year 2021, the company generated 25% of its revenue from its company-owned stores and another 8% from its e-commerce websites. The rest mainly came from its retail partners and franchisees. In terms of regions, Levi's namesake brand generated 54% of its revenue in the Americas, 31% in Europe, and 15% in Asia. Over the past year, a rising dollar has significantly reduced its overseas revenue, which can be seen in the wide gap between its reported and constant currency numbers. Over the long term, Levi Strauss believes it could generate up to $10 billion in revenue by fiscal year 2027, which would represent a compound annual growth rate of 9.5% from its $5.8 billion in revenue in fiscal year 2021. With an adjusted EBIT margin of 15%. It plans to achieve that growth by tripling its e-commerce sales and nearly doubling its sales of women looks and tops, as well as ramping up its investments in its digital channels and data crunching analytics capabilities. While Levi Strauss does have a low forward price to earnings ratio of 10 and its high forward yield of 3% could also limit its potential downside, in the current market, you might not want to rush to buy Levi's stock. It's definitely not the worst retail apparel stock on the market, but you could also find some better deals out here in this current market. But let me know what you think about Levi below. For me at least, Levi is one of the largest positions in my portfolio because I love the brand and I see the growth potential within it. I mean, Levi is a long-term stock in my opinion. It's a well-known brand, and over the long term, I see the company continuing to grow. But in this current recessionary type market we're in, I'm not sure if people are going out to buy brand new $60, $70 jeans and denim apparel when you could go to other less expensive alternatives. But that also gives the opportunity for me to potentially buy some more stock for when market conditions potentially turn back around. But let me know what you think about Levi Strauss below. Are you buying it? Are you selling it? And just what are your general thoughts on the company? Please don't take this video as financial advice, and thank you for watching Morris Money.